Hi there, Serial Trader here. I'm going to have a look at the major US indices and let's look at SPX. Now there's some pretty good signs that we may put in a significant low here, so let's just work through that. Now as far as the wave count from the current all-time high there at 48.18, I think it best counts as a three-wave decline so far. So 535 ABC zigzag. I think I've previously discussed that I'm not fond of the internal count for the A wave, for the 5 down for the A, but at this point it's certainly the best looking labeling scheme I can come up with. But overall we got a down up down sequence contained within a parallel trend channel. We've achieved A versus C equality. Now on an intraday basis on Thursday we briefly poked below that, but then quickly came back above. So, and again tested the lower end of this trend channel, threatened to poke below, but now we're back in it, so that's promising. Kind of flush out all the stops, and perhaps now we finally have the conditions present for a more sustainable move up. Now, okay, the alternate count here, if this isn't just an ABC down for a larger wave 4 with perhaps one more wave 5 up to make a new high before we can really consider the big crash that everyone's been talking about. That's kind of my thought still, that we need one more sequence to new highs before we can entertain that. But if in previous videos I think I've provided an alternate where we did already finish the major top, and if that's the case, we still have a 5 down 3 up, another 5 down, but instead of looking for a move to new highs, we would be just seeking another counter trend rally. It could be quite a potent one, right? Volatility works both ways. It doesn't feel like it when you're in one of these big declines, but you do often get these very vicious counter trend bear market rallies, if that's even what we're in, if we're in the bear market already. Now, okay, so what would we be looking for if that was the case, if we're just doing a partial retracement of the most recent 5-way move down that started from the 29th of March there? Well, since we basically have similarly or move the move down, the A wave and the C wave, since they're of similar length, well then let's just entertain the thought that, okay, if this rally was of this potency, this next counter trend rally could be of similar or equal potency. So if we do that, okay, so just the length of this B wave projected off of the proposed bottom of C. So if we got a similar counter trend rally, same strength, same price movement, would that get us up to 43.81, almost 4,400, okay? And what would that be for a fib retracement of this leg down? Let's just have a look. That would be just past the 618, kind of in between the 618 and the 786 retracement of this 5-wave decline from the 29th of March. So if we do get up there and fail and start turning back down, perhaps that's what we're doing. And in that case, the count wouldn't be A, B, C down. It'd be like 1, 2, 1, 2 of a larger 3, and then the market's just going to get absolutely hammered. But we'll have to cross that that bridge should we get there. At the moment, I think the focus either way, whether this is a bear market rally or something a lot more sustainable and powerful, either way I think we have quite a bit of a upside move potential here, given how extreme the conditions were at the bottom here. And so let's work through that. Okay, so I think I've presented my case on SPX. We could just go on quick. So it looks like we've started a little impulse wave off the bottom, so that's good to see. But okay, that's probably all that needs to be mentioned for SPX. Now, if we go to the Nasdaq, I just want to quickly touch on the Nasdaq. So Nasdaq, you can also get a ABC down, a 3-wave decline, and we did again poke below the trend channel briefly, but now we're back up inside of it, so that's good. We didn't quite reach AC equality on regular scale, but in log scale we actually slightly exceeded AC equality. So you're splitting the difference there on the Nasdaq. We essentially reached or nearly reached AC equality, depending how you want to measure it. And you do have a very clear bullish divergence on daily RSI here on the Nasdaq. You can see our RSI low was way back here in January, and now even though we've made a new price low, in fact 2 more new significant price lows, we are making a clear higher low on the RSI. So that's a good sign if we're going to have some sort of a sustainable bottom. You want to see that kind of momentum divergence with price, which we do have here on the daily, so that's significant. Kind of add some potency to the idea that this could be, you know, a major low. Okay, and if we go to the weekly on the Nasdaq, now this is where things get interesting. So I don't have the greatest wave count to offer for the move off the March 2020 low. It's less clear to me than the potential wave count on the S&P or even the Dow for that matter. But what I will just say is, okay, it looks so far like a three-wave decline, a three-wave correction of this, you know, monstrous move we had off that March 2020 low. We're close to AC equality or at it, depending how you want to look at that. And what did we do as far as a retracement of that overall move? Was it a 50% retracement, roughly? Yeah, so almost a bang-on 50% retracement of the entire March 2020 decline, and now getting a reaction off that point, which lines up well with the AC equality area. So I like that. Again, even if there's going to be just a counter trend rally, then more downside if something more bearish is happening, I think we will get a significant counter trend rally at the least. That's my current take. And if we look, so I actually briefly mentioned this in that Bitcoin update I did intra-week there a couple or a few days ago. But we got basically to 29.99, so basically 30 on the weekly RSI on that March 2020 low on the Nasdaq 100. Now, intra-week we actually got to that point or even slightly below, but since we recovered so much on Thursday and Friday, we actually didn't close our RSI weekly quite at that same level, but it's right there in the ballpark still. We still closed the weekly RSI at 31.69. So that's another reason why I'm thinking, okay, at the very least, a pretty significant bounce is coming, if not more. So I just wanted to show that. Okay, that's the Nasdaq. Well, that's all I wanted to go through as far as that. Now, if we go over to Thinkorswim, okay, obviously we're in the oversold condition on the daily oscillator on SPX. We got right up to the T line here. This is kind of a hammer candle there on Thursday, continuation on Friday. We're just up against that T line. It'd be nice to get above the T line, and then for the T line to start acting as support on pullbacks instead of resistance on bounces. So we'll see how that develops. Weekly chart of SPX. Looks like a reversal candle on the weekly, possibly a bullish hammer. Again, we got to confirm by continuing up next week. We are in the oversold condition on the weekly oscillator, so that's fairly significant. Okay. Now if we go to the Dow Jones Industrial Average, so the Dow finally caught up with the other two indices, and it did make new lows. It didn't maintain the potential of a 5 up, 3 down, which was kind of standing out from the other two indices. So now I think the best count, not to get into too much detail for the Dow, is like ABC for W, ABC up for an X, ABC down for a Y, so just a double zigzag correction on the Dow. And on the weekly, you know, that would still fit just fine as a fourth wave for the overall sequence off the March 2020 low. And here, let me just get this kind of scaled the way I'd like it. Hang on. Time axis. Okay. Let's get this into shape here. Yeah, so off the March 2020 low, you could probably still get like a 5 up, 3 down. So 1, 2, 3, ABC down, or in this case, WXY down for the 4. So the Dow can certainly still be considered a fourth wave correction, just like the S&P can still be considered that. And then, of course, we'd be seeking new highs on the Dow. But not to get into that too much. What do we have for candlesticks here on the Dow? Looks like we have, yeah, kind of a hammer reversal candle on Thursday, and then, again, continuation up on Friday. On the weekly, what do we have? Not as strong of a looking candle on the weekly there on the Dow. But definitely a long lower shadow. I guess you could almost call it a hammer, although I'd like to see the real body a little smaller for that. But we'll give it some benefit of the doubt here and call it a potential weekly hammer reversal on the Dow as well. Okay. And of course, you know, oversold on the daily oscillator. Not quite oversold on the weekly oscillator. Okay. So we'll go to the Nasdaq composite. So obviously oversold on the daily oscillator. As far as reversal, same idea. We got the reversal Thursday, continuation Friday, closed fairly strongly, so that's good. Early signs look promising. Weekly, we're definitely oversold on the weekly oscillator, so that's of significance as well. Okay, and potential weekly hammer reversal candle, a nicer looking hammer because it's got that smaller real body. It looks more like a classic hammer candlestick. So that looks pretty interesting on the Nasdaq as well. Again, we need continuation next week for more confidence. Sorry, that was the Nasdaq composite. Nasdaq 100, same idea. Not much else to remark on there. And again, basically achieve that AC equality, or achieved it depending if you're in log scale or not. Okay. Oversold in the daily oscillator, same as the composite. Weekly as well, yeah, same as the composite. Now, how's the weekly candle look? It actually looks like an even better weekly hammer reversal candle here on the Nasdaq 100. So that's promising. Again, continuation needed next week for confirmation. Now the VIX. The VIX never got that high. In fact, it was making lower highs the whole time we were digging lower lows on the market. And now the VIX is starting to reverse pretty sharply, so that's a good sign. Okay. So VIX trending down equals market trending up for the most part. So let's see if that continues next week. Do we have a weekly? Do we have any weekly bar that looks interesting here on the VIX? Just a good weekly reversal candle. VIX was down 9.13% for the week, so that's good. That's what you want to see. You don't want to see a surging VIX. You want to see a declining VIX if you're looking for upside on the indices. Okay. And the VIX VVIX tool. This is actually a pretty good signal so far. So we have the divergence between a lower high on VIX and a lower high on VVIX compared to a lower low on SPX, so that's good. We also had a smaller time frame divergence between VVIX and VIX itself. So from this measurement point, VVIX made a slightly higher high, although still overall lower high from that measuring point, and VIX actually still made a lower high compared to VVIX on this reference point. And now they're both declining together, which is good. VVIX is back below the red moving average, and now SPX has poked back above the blue moving average. So we technically have a nice buy signal activated on this tool. So I just thought I'd point that out. And what else is there to say about that? Oh, that's probably good. I mean, bottom line, if you're not already long, if you've done nothing, if you're gonna take a stab here, obviously, what was that? Thursday's low. Yeah, Thursday's low is a must hold. That's where you need to have your stop, and you're gonna be targeting, as we discussed, even just in a counter trend rally, well into the 4300s, maybe closer to the 4400, even if it's just gonna match this rally we had that was during March, into the end of March. If we're just going to simply match that, we still got some pretty good upside potential. And if we're going to do more, obviously ultimate confirmation is getting above this level at 46.37, because then we can't go 1-2, 1-2. Then we have to view it as a three-wave decline with a new move poking above that proposed B wave, right? But that'll be, don't worry about 4,600 and something when we're still down here at around 4,000. So initial target, I would say, in the 43 to 4,400 range. If we're just going to simply match this prior rally, if we are still in some sort of bearish trend or a major bearish trend, and if we're not, then we could possibly be looking at move well into the 5,000s over the coming weeks and months from around 4,000 currently. So that's pretty nice. Again, you got a clear level to hold here, must hold level, 38.58. If that gets taken out, then all bets are off for now. All right. We'll see what happens next week. Serial Trader signing off.